I'm with CEO Victor Cantore of Amex Exploration, AMX on the TSX Venture. And with Amex, we got some really important news on Wednesday morning, including the renaming of what was formerly the high grade zone as the Champagne Zone. I like this renaming. I really like the name Champagne. So let's learn more about the Champagne Zone. Uh, hey, Victor, how are you today?
Oh, I'm great. Thank you. Thank you for having me on your show again. Really looking forward to talking about this new resource.
Yeah, so there's definitely a few key takeaways here, but let's start with the Champagne Zone. So uh, the grade looks substantially higher than what it was last year. We've got over 16 grams per ton as opposed to 12 grams per ton. So tell us, what happened here?
It was a couple of things, and we did put it into the press release. When you actually look at the density of the drilling in the high grade zone, it's quite high. So when you shift this from mass tonnage to high grade narrow vein, so you're leaving out the lower grade composites on the outskirts, and this project, like this zone, is actually the Champagne Zone, is actually quite continuous and homogeneous. So you can actually do it, and these are all mineable. These are all mineable widths. The minimum width is it's on the press release. It's a 2 meters by 2 meters by 2 meters. So the minute you're removing all those low grades on the outside that they propagate all these low grade composites, it's you end up with what this Champagne zone really is. So the Champagne is the gold standard for sparkling wine, and I think this mine, this Champagne zone really is showing itself that it's really a high grade of high grade nature. Really easy to mine. It's you're looking at this. This zone dips down around 89 degrees. Easy to put in. I use the word easy. There is a lot of work that needs to go into it, but it's a lot simpler when something dips down at 89 degrees. So yeah, we're very happy. And the other change also is, as you're constraining the resource and you're bringing in going narrow vein, high grade, you're also increasing the confidence. And we were able to increase. If you look at the old resource, it was 336,000 ounces in M&I, and now you're at 830,000 ounces, and I believe 140 some odd thousand of that is in. So what I wanted to say is that you're looking at 831,000 ounces at 16.2 grams per ton on a body that's actually dipping at 89 degrees. When you look at the increase from the last time, we went from 336,000 ounces to 831,000 ounces, and also on the measured, and that just shows you the confidence that they had in there, where the resource modeler actually gives you measured. And we have 149,000 ounces at 15.28, and you're looking at a half an ounce basically. That's quite impressive. These are the type of mines, these are the type of zones and projects that you need to be highly profitable.
Yeah, so the grade really does stand out, right? There's not many, resource estimates that I see in the gold mining sector where the average grade is 16.2 grams per ton. So as you said, that's more than a half ounce of gold per ton at today's gold price. That's over $1,600 per ton of rock. So this is extremely high grade. It's going to be underground mining, obviously, as you said, narrow vein, and it will be underground mining. So about 1 million ounces in all categories right now in the Champagne Zone. And clearly you're wanting to move this forward. There's conversation in the news release about a bulk sample, about a PEA, and I even read an analyst report that said something about mining in 2027. So tell us about what the path forward is here at the Champagne Zone.
Sure. Again, I'd have to give you all the waivers. It is forward looking. When we talk about permitting, it's something I don't control. I can just look at other companies, what they've done. I can look at the government policy and whatever. So I will. These are forward-looking statements. This is basically our plan. So we plan to. So there's two things that would go on. Simultaneously. One is going to be the bulk sample. I definitely want to apply for a bulk sample. So I don't know how many tons I will be able to get, but we are applying it. So that number could be anywhere from 15,000 to 40,000 tons. Application should be in sometime in July. So again, this is where I speculate the permitting process for a bulk sample. If your permit application is done properly and not leaving anything out, should not take more than 6 months. That takes you to the end of this year or sometime in early of 2026. Once you've got that permit, you can actually start development / construction of that. That should take about a year. So when you're constructing this, when you're constructing the decline, putting in the ramp for your bulk sample, it is going to be the same size as your what you would be doing in that Champagne zone in the future when you're producing. So it's not you're actually advancing things. So that portal will be there. It will be built. So that takes you to the end of 26 or early 2027. And that's when you will be able to mine out your bulk sample, depending on how much you get as a bulk sample. Now, that's the bulk sample. It'll be sometime in 2027. Let's back up to today. Yesterday we put out this resource. We're going to follow it up with a PA. The PA is going to be hybrid, meaning the first 3 or 4 years or so. Again, this is not written in stone yet. This is our plan. I'm the CEO of the company. These are forward-looking statements. So we're planning on putting out a PA that shows a hybrid model, first 3 or 4 years of toll milling, and the balance of the project will be the full mine, like we will be presenting, like we presented in the old in the previous. Well, it's not the old PA. It is actually the current PA. It'll be the same. It'll be that type of a plan, but just going to be different now because we're expecting to have many more ounces included in the PA compared to the last one. That would take you sometime in July. The minute you have that, you launch a feasibility study just for the toll milling part for now. So you launch your feasibility study. It should be done. It should be concluded quite quickly because you're not talking about doing a feasibility study that includes pits, tailings management facility, or a mill. So that should take you about 6 months or so. The minute you've got a positive feasibility study, so assuming we're at the beginning of 2026 or the end of 2025, you start your environmental impact assessment. In Quebec, that's part of the BAP, but you're also doing your environmental. That normally should take about 2 years or so. That takes you to sometime in 2028. Because your portal is already built, your ramp is already built, it should be very quick to start exploitation from there. That's where we're saying we want to put this company as a near-term producer, and we could most likely be in production, toll milling sometime in 2028. If from 2028 and on, that's when you start applying for your full permit, also for the entire mine. That would include your pits, your tailings management facility, and also your mill. But all the while you're doing this, you're actually generating revenues from the toll milling operations. We'll be able to tell you more when it gets to specific numbers. But when you're starting here with the high grade zone, with the Champagne zone, and you're mining half an ounce, it doesn't take a lot of ounces to have some substantial free cash flow. And we'll wait till the new numbers come out, and I'll be able to talk about those numbers. And if I look at the one that's current right now, it's showing $807 an ounce US as your all-in sustaining cost. But if you're toll milling, then you would have to add the transport, and you'd have to add the toll milling, and those are the numbers that are going to be. We're all going to see those numbers as soon as the new PA is ready, and then obviously inside the feasibility study. So I'm very excited because it positions the company as a near term producer. And then when I am building it out for the whole mine, starting from 2028 and forward, we're going to be in revenues in there. And again, look, if I share some numbers with you, again, these are just numbers. This is forward looking. It's speculating. But even if you're only producing 600 tons a day from the Champagne zone, you would be able to generate 300 ounces a day. That means 2,100 ounces a week. That's in excess of 100,000 ounces. That's in excess of 100,000 ounces a year. So you can do the math with that. We'll see it better once we put out the actual studies.
Yeah, there's a lot to unpack here. So the Champagne zone, 950 or 1,000,000 ounces at half an ounce gold per ton, roughly, just ballpark, numbers there. That's impressive, and that's a great starting point. And I love the bulk sample idea, but I want to just go back to 6 months ago when we were talking about multiple open pits, and there's all these other zones across the project: the Gray Cat zone, the Team zone, the E2 zone, all these different zones. So what happened to all the other zones, and what are you contemplating? How can you integrate all of this into the project?
Absolutely, it's all going to go into the project. We're fortunate enough that we have this high grade zone, so we're able to start mining this Champagne zone ahead of everything else. We will definitely, if I give an example, this would be an example. I'm sure you've heard it in the industry in the past where people have multiple open pits to put into production, and they talk about a starter pit because it happens to be a little bit higher grade. So you want to start, you want to start mining with the starter pit. Well, this is the same thing in our case. So in our case, we're fortunate enough where you have 831,000 ounces at a half an ounce per ton in a body that's vertical. And when I look at the infrastructure in the area from Toronto, or from Toronto, you could drive up to site in 7.5 hours in paved roads. You have a workforce, you have roads, you have electricity, you have water. That's like, if you look at our presentation, we show you where the electrical station is. It's 4 kilometers where we want to put down the laydown development. So the plan is to get the Champagne zone in production, start generating some serious money, and then you apply for your permitting for the whole project. So it's done. They're going to be there. It's going to be integrated. It's going to be in the PA plan. We will be able to see it.
Got it. Okay. So the Champagne zone is just the biggest and the best, and it's the starting point. It's as you said, the high grade starting point for the entire project. But the property is quite substantial, and there are multiple zones that are also pretty high grade that just haven't seen quite the amount of volume of drilling that the Champagne zone has seen to date. So this bulk sample contemplated 2027, you said. Obviously, a lot has to be done between now and then. But let's say you proceed with the bulk sample in 2027. How much will that cost to extract the bulk sample, and where do you start in the ore body? Like, what's the spot at Champagne zone that you'll be extracting this bulk sample from?
Okay, again, I'm going to give you all the waivers. I want to share this with everybody. I just don't want to get in trouble with the regulators. But we will be putting all this out. So it all depends on the amount of bulk tonnage that they will allow us to extract. The development, again, these numbers are, forward looking. You'll be looking around $20 to $25 million in a development, so the construction of it, to build your portal, to bring in your ramp. Then you're going to have costs to transport and costs for toll milling costs. I mean, transport, depending where you send it, could cost you $60 a ton. So again, you'd have to multiply that by the amount of tons. And milling costs could be, if I want to be, I want to put in the highest prices possible, you'd be looking at around maybe $100 to $130 a ton to transport. And the gold, because you'll have gold, you can back it up with the gold. I'm going to be trying to do that in a fashion where it's backed up against the gold, and limit the dilution to the shareholders.
So the company is well on its way to becoming a mining company, quite frankly. And it actually makes a lot of sense because the location of the project is very attractive. There's a lot of infrastructure, there's skilled workforce in the proximity. And I think you even said to me once that a lot of the main industry in this area is logging and forestry, right? And that's a cyclical, industry, goes up and down. And sometimes that industry goes through a downturn and people lose their jobs. And so it would be natural for them to find employment here, and become mining or be some sort of a service work to the mining industry. So it makes a lot of sense. And I'm starting to hear more junior mining companies talk about turning rocks into dollars. I think a lot of people just kind of peg this industry as they never actually generate revenue. They just drill and talk about how many ounces of gold they have. But I think if $3,300 gold price isn't high enough to start turning rocks into dollars, then maybe we're in the wrong business. So I like this path that the company is on, and obviously the Champagne Zone is a special ore body. So PEA and maybe feasibility study are important milestones that need to be accomplished. So tell us a little bit more about the PEA and what kind of information do you expect this new version of the PEA that will be forthcoming to have in it?
Absolutely. So the PEA, the last PEA that we did, we just did it on a standalone, so that integrated everything in there right from the get-go. So the approach this time will be a little bit different, where you get the project into production for the first 3 or 4 years with an extremely low capex, start generating revenues, and then you'll have the integration of all the open pits and a standalone project with your own mill. There's a couple of things that really happens there when you do it that way, is because you'll actually mitigate the risk on the technical side, because after 3 or 4 years of mining, and you look at the volume there right now, the Champagne Zone is actually most of the volume that's there right now. And when you mining after 3 or 4 years, you'll be able to size your mill properly. And that's very important, because it's happened where you start off your mill and all of a sudden your rock is not behaving like you expected it to. You're having a hard time feeding the mill. Here you will have 3 years or 4 years of experience. You know exactly how to size this mill. And also from the financial side, if you're able to generate, if I take the numbers from the old PEA, and extract just what you would be getting out of the Champagne, the now called the Champagne Zone, it's going to be substantial amounts of free cash flow, and you can accumulate that free cash flow in order to start your paying for all your capex on your project. I think it's a great way. It's a great way to have a project, and so you're lowering your financial risk and you're lowering your technical risk on the project also. Although that you look at the Champagne Zone, like it's really special. That's really what helps this entire project. Is the other zones are nice. They're nice pits. They're nice grade, but the Champagne Zone is special.
What kind of feedback have you received from some of the larger shareholders of the company since you put this out?
Very, very positive. Very positive. It was really. I'm a shareholder. I've got congratulations from shareholders, from strangers. I've had people walk up to me. I'm at the Canaccord conference. It got released yesterday, so the Canaccord conference is already a couple of days it's going on. I've had people who've come up to me and congratulate me. It's really. If you look at the big differences between the two resources, like I know we went from 1.6 to 2.3, but the big difference is the amount that went into measured and indicated. That's really the key number, because a good amount of those numbers will end up in the economic studies. So it will increase the amount of ounces that will be in the economic studies, in the PA, and then obviously in the feasibility study. So yeah, it's been very positive. I mean, you look at the amount of ounces that are in M&I. I'll go ahead and call it a tier one project at this, a tier one project in a tier one jurisdiction.
Yeah, the average grades went up, the size of the resource went up, and the confidence in the resource went up. So that's a triple win there. So definitely positive news here at the Champagne Zone. So let's look forward some more. Victor. So you still want to make new discoveries. You still want to add more ounces. So is there a rig turning or multiple rigs turning? What's the plan for more drilling?
Absolutely. So we do have a rig. We do have a rig on site, and we have to remember that when the initial discovery was made, they actually made it with one rig at the time. I want to move the resources more on the development to become a producer, and I definitely do believe that we'll be able to find a lot more ounces on this project, not only on the eastern side, on the Quebec side, on the Perron project, but also on the Perron West project. And we can embark on a very aggressive exploration program with free cash flow. Again, limiting dilution. So.
And how is the company for cash currently? How much cash do you have in the treasury?
So our last financials that we put out, which was only a couple of days ago, it was showing about $10 million or so. So we're okay.
So that gives you runway to put out the updated PEA and then get you through the end of the year.
Yeah, absolutely, including the feasibility, and that's why we reduced it down. We reduced it down to one drill. We want to make sure we have a good runway.
Okay, and then I guess the final question, another forward-looking one, the bulk sample. So 10 million gives you a lot of runway, but it doesn't give you the full runway to the bulk sample. When might you add some details on how you plan to potentially finance the bulk sample?
Soon, as the permitting goes in, we will start negotiations with the mining contractors, with the mills where we would send it, with also the transport companies. If you break down the bulk sample, there's three major components of it. So you've got the construction of the portal, you've got the transporting the ore to the mill, and then you've got the milling cost. And there is, I'll throw around names. People ask, well, where are you gonna send them? I mean, there's so many places to send it. There's Casa Berardi, 60 kilometers north of us. There's Northern Sun Mining on the Ontario side. That's the Redstone Mill. You have Holt Holloway also on the Ontario side. There's our partner at El Dorado with the Lamac, and there's the Westwood. The thing is with high grade, it's transport and toll milling costs are not an issue. When you're transporting 16-gram material, it doesn't matter. Like, your maybe transport will be $60 Canadian a ton, more or less. Toll milling costs, even if it's 100, that's basically one gram that you'd be losing. And even if I go here, put 2 grams on it, you'd still be at 14 gram. You'd still be at 14 grams once you've paid for everything. That's why I'm expecting this to be very, very lucrative.
Yeah, and I think, yeah, as soon as you're able to add more visibility, put some more numbers down on paper and presentations,
Yeah.
I think investors will start to appreciate the potential here. Um, Final question, and this is an important one as well, permitting, right? So permitting has been a conversation in both Canada and the US in 2025, and how the governments can make permitting easier, streamline the process for the mining industry. So what's the permitting timeline like for the bulk sample?
Bulk sample is usually takes no more than 6 months. There's a lot of work. You have to have all the work ready. It's something that we've started doing. It's something that we've already started doing, and that's one of the like, we've hired different companies, and maybe we should just make more announcements every time we hire a company and what the work was for. Maybe we'll start doing that, but it's important to have everything in your permitting applications. You're still going to have to do water samples. You want to do they need to do even the overburden when you're bringing it over, the effect that it does on it. There's a lot of real detail in there. So as long as you get your permitting application properly done, very detailed, you should not be beyond the 6 months. The problem starts if you don't fill it properly, and then you start getting questions, and the guy takes 30 days to read it, sends it back to you. You try to get it back to him in a week, and then he'll take another 30 days. So we're trying to have it fully complete and send it in. Again, I don't have control over permitting, but that's usually the timeline on a bulk sample. And again, the bulk sample, it's really important to know is that once we built that portal, it's the portal that we're going to need. It's the same portal that we would have put together to go into the Champagne zone. So it's not something that says, look, I've spent this money and I've wasted it. It's part of the CapEx.
Yeah, it's a capital investment for long-term cash flow generation. So that's great. So if I heard you correctly, PEA should be out this summer, and
Yep.
then you'll be submitting the application for the bulk sample as well over the next couple of months. And then the clock will start, as you said, the 6 months. So potentially early 2026, you
Yep.
might receive that permit for the bulk sample.
That's correct. That's correct.
All right, Victor, thank you so much for your time. This was a great conversation. I appreciate the update.
Thank you, Robert. Hoping to be here soon again, and we'll update you on further developments.
Yeah, the PA.
Yes.
Awesome.